The market may be uncertain right now, but that's where the opportunity lies. Uncertainty breeds value if you know where to look. Today, we're diving into 3 companies that I believe are set up for outsized returns in the current macro environment. These aren't your typical momentum plays. These are businesses with strong fundamentals, misunderstood narratives, or tailwinds the market hasn't fully priced in yet. First up, Aehr Test Systems, ticker AEHR. This is a small-cap semiconductor test equipment company, and they're flying under the radar. Their niche? Silicon carbide wafer testing. Why does that matter? Because silicon carbide is critical for EVs and high-voltage applications, especially in vehicles like Teslas and heavy-duty trucks. Now here's the kicker, Aehr is practically the only company offering scalable test solutions for SiC wafers. They reported a revenue increase of 28% year-over-year in Q1 2025, with their order backlog reaching all-time highs. That signals future growth is already locked in. The short-term risk is tied to dependency on a small number of customers, but long-term? If the EV sector keeps expanding, so does Aehr. Next up, Pinterest, ticker PINS. I know, social media has been a mess. Meta, Snap, and even Google have all had to adjust to new advertising realities. But Pinterest is quietly executing a turnaround strategy. They're not just a place to pin wedding dresses anymore, they're becoming a visual search engine for commerce. They've partnered with Amazon to integrate shoppable content, and their user base is growing again after quarters of stagnation. Ad revenues are up 16% this quarter, and their average revenue per user, especially in international markets, is just starting to take off. If you believe in the future of social commerce, Pinterest might be a value play masquerading as a tech stock. And finally, Agnico Eagle Mines, ticker AEM. Let's talk gold. With inflation lingering, central banks stocking up on bullion, and geopolitical instability rising, gold is back in the spotlight. Agnico is one of the few major producers with high-quality assets in politically safe regions. They've kept costs in check, they're generating strong free cash flow, and they pay a consistent dividend. But here's what makes them interesting right now. They're trading below their 5-year P/E average while gold prices push toward all-time highs. If gold breaks out, Agnico's operating leverage could give it serious upside. So what's the common thread here? You've got a high-growth tech microcap with a monopoly in its niche. A mid-cap turnaround story with long-term optionality in e-commerce. And a defensive commodity play with upside in a bullish macro backdrop. But none of this is financial advice. These are leads, starting points for deeper research. My approach is always the same. Look where others aren't, ask what the market might be missing, and build a thesis rooted in fundamentals. If you found value in this breakdown, hit that like button so YouTube knows this content deserves to be seen. And let me know in the comments, which of these companies do you think has the most upside in 2025? This is Legacy Analysis, digging deeper so you don't have to.